welcome to your trades the week ahead. And the last and final trading week of the year comes to a close with the Nifty position at 5,900 and a 1% gain coming in this week.
Yeah, I mean, for the month as well, went nowhere really, did a lot of gyrations, but eventually settling down to that 0.5% kind of a gain. But this week, though truncated, was eventful.
Oh yes, indeed. We had the expiry as well to deal with. So did pretty okay actually, you'd have to say. Well, the Nifty for the better part of this week was largely range bound, very narrow rallies coming in. Nonetheless, we managed to put on about 1% in the green and better traction coming in for the broader markets. With the Bank Nifty, 1.2% gain coming in there. You had the Nifty Junior, 1.2% gain again coming in. The Realty Index, 2.2% gain. Oil and gas held out. Cap goods, power, IT, auto, pharma, healthcare, all these indices were sectoral gainers. Bharti Airtel, Tata Motors, Wipro, Kane, IDFC, Lupin, DLF, Tata Power, Axis, BPCL shot up in trade on Friday, and that really made it put on a very good performance over the week as well. Reliance Industries too, and Bajaj Auto and NTPC were the gainers. On the flip side, losses coming in for Grasim, M&M, JSPL, Unilever. You had Power Grid as well as Ultratech Cement, which actually retreated this week.
Some individual mid-caps, and which were, well, for news or otherwise, but were the top movers. So on the gaining side, there was Arvind, which had a spectacular rally this week, but for a minor blip on Friday's session, did very well for itself. Suzlon had a decent gain too, so 8% higher for that one. Mid-cap power made a bit of a comeback, especially in Thursday's session. So stocks like NHPC or an Indiabulls Power, for example, as well, the hydropower companies had a decent enough run. And Berger Paints was the other one, which shot up in trade this week. So decent enough gains for that one. Strangely though, after a stupendous run, Strides took a bit of a backseat. So 3.5%, the kind of losses that came in for a Strides Arcolab in this week. The small cap side, number of stocks, Vascon, Kokuyo Camlin, Indorama Synthetics, a number of these stocks had meaningful gains all of this week. What to do though? At the start of the new year, well, 31st will probably give an opportunity to maybe build positions for the coming week at least, if not for the year as a whole. And to talk about that, we have our technical experts with us, Sandeep Wagle, as well as Dr. C.K. Narayan join us on the show. Gentlemen, thanks so much for joining in. Dr. Narayan, quickly though, a view on the index this week, Thursday and Friday, late rallies coming in. You think it can continue on to the next week as well?
Well, I think, it certainly seems to be building up hopes for a rally in the coming year, the coming week as well. Typically what I've found is that when the month as an expiration is pretty long, like January is, you have expiration on 31st, right, onto the last day. Typically history has shown us that those are trended months. Now, if you take that in the context of the last quarter, October, November, December, which have been very, very truncated months, particularly December, I think, is at, let's say, a multi-year small range month. So it seemed more than likely that we should have a trend. And given the fact that the Nifty did not really grab the chance to go down when it did, when it got pushed down to the 58, 30, 50 levels, and has actually come back to close rather strongly into, I would say, a recent high close at about 59.50 today on the futures. Putting all this together, my hopes for some upside traction to the market has been kindled, and I would certainly approach the market with a slight positive bias. I may not become gung-ho and go aggressive on long futures, but I would certainly want to trade this, I think, using options, because option volatilities are low. I think expectations are a bit low. And given the long month, I don't see option prices as being too expensive. So I think it's a good deal. If we want to trade long, we should initiate positions using options. And I think wait for a subsequent breakout above 5965 or 12,600 levels on the, let's say, Bank Nifty futures. Once these are achieved, we can add further positions using futures. Stocks also will perform, and I think we should probably, my bet is that we'll have a much better time in January.
Sandeep, how are you looking to trade the Nifty on the last trading day of the year on Monday?
Well, I was very much disappointed with the action of the Nifty over the past few days or weeks, but the way it has closed, it is threatening to take out 6,000, and if that happens, then 6150 is the next target, and possibly the prior high of 6,300 something. Now, whether that will happen in a week or 10 days or it may take 2 or 3 months, that is the question. But I have no doubt in my mind that 5800 has become a very strong support and that will not be breached. I have been saying this for almost the last 3 or 4 weeks and I have been proven right on that count. And any correction or a decline nearer 30, 40, 50 points in the Nifty should be bought into. Whether it will give a breakout decisively, that I am still not sure. I am still seeing more stock-specific action. Hopefully things change in the coming week and the coming year. And once above 6,000, which has been a strong resistance over the last 6 to 8 months, twice it has got stuck there. It will easily go to 6150 and then possibly 6300. That is what my view is. But then I can't take the time. I can't talk of a week or two. It could be possibly the next 2 or 3 months.
Right, fair point. Meantime, it was the oil and gas stocks which really perked up in Friday's session. And here's perhaps the reason why, because the oil ministry has now proposed a hike in diesel prices at the rate of ₹1 per litre every month for over 10 months period. Now, as the government tries to bridge the wide deficit, officials believe that avoiding steep hikes will keep controversies at bay. Prices of diesel, which currently cost about 47.15 per litre in Delhi, were last revised on September 14th when they were raised by a steep 5.63 rupees per litre, provoking massive protests as well. Now, the ministry's plan for hiking kerosene prices is even more crucial, 10 rupees per litre over a 2-year period. With India facing the possibility of a downgrade from global rating agencies, the government has no option but to bring down subsidies to meet the milestones. But it is also keen on not losing any political ground in the process.
Yeah, that's actually a pertinent point as well, and probably the top newsmakers. Very quickly, Dr. Narayan, any of the oil and gas stocks that you would initiate trades on?
I would stick to Reliance. I think that is the best bet from the futures. HPBP are sporadic movers. Now, one rupee per month and all is not really going to do the trick for HP to come back to its past glories. It might see a little bit upward traction. BP, IOC might move in the wake. But I don't see anything really translating into the other oil and gas space. This is very evident from the fact that no OI buildup is visible across the entire sector if you take a look, including Reliance for that matter. But then that is the one with the leader stock kind of status and the most amount of trader attraction. So maybe long in Reliance for 15 rupee rise, little more positive if 850 is crossed.
Okay, on to the other top newsmakers, and those were the new listings, 3 key listings. Let's just quickly first get in management reactions. The first one, the big one, and deja vu for Sunil Mittal as Bharti Infratel plunges on the day of its listing, just like its parent company. Bharti Infratel Vice Chairman and MD Akhil Gupta is defiant, however. He says that the issue was priced correctly, contrary to what retail investors may think. Let's hear him out.
About 23% of that is offer for sale. So it would be 3,000 something which would come to us. That's mainly for the capex over the next 2.25 years.
So now that you've listed, can you give us a sense of what kind of growth are you expecting for this financial year as well as next year? And where can we see the tenancy ratio settling down at for the next couple of years?
Look, as a matter of principle, we don't give guidance. We wouldn't be giving guidance for this company as well. But you have the research reports which say that the tenancy for the industry should go up from 1.7 to 2.46 over 5 years. We are already at 1.9.
The company already has a store strength of 30 spread over 8 states, and now we plan to expand. To 20 additional stores by March 14 and increase our strength to 50 stores. Our export sales constituted about 30% of total turnover in fiscal 12. But we feel that the proportion should decline by March 13. The margins are slightly less in export, but overall they are good, but the margins in domestic are better. So for the next few years, we feel that concentrating on domestic business should give us better returns.
We have started doing ratings on our own in the Republic of Maldives. We have plans to go to other adjoining markets like Mauritius and some other adjoining countries. We have also signed up with the independent credit agencies in the independent markets like Brazil, South Africa, Portugal and Malaysia to start an international credit rating agency. Last year we rated more than 5,000 rating assignments. I think this year also we will grow this number to something like 5,500 to 600 credit rating assignments. We have a research function and we would like to grow this research function both organically and inorganically. In addition, we have already bought a company known as Calypto, so we would certainly looking at some more acquisition in this kind of space.
Okay, let's take that new listing debate forward and let's bring on board our research analyst Yatin Mota, who's going to stack up the 3 new listings this week and tell us which one's likely to see more gains from here onwards.
Well, as expected, it was quite a disappointing listing for Bharti Infratel. In fact, the Bharti Infratel shares settled lower by nearly 13% at the end of the day versus the issue price, which was fixed at 220 rupees per share. Now, if you talk about the analyst concern, and valuation is one key concern which analysts believe was the prime reason why there was a such a disappointing listing. If you talk about the current valuations at 190 rupees per share, it trades at almost 9 times EV/EBITDA based on FY14 earnings estimates, and the share price is quoting close to 40 times price to earning multiples based on FY14 again earnings estimates. So clearly on the valuation front, most of the analysts are not comfortable. The management tried to defend the pricing of the issue, but analysts believe that if you compare it with global peers which have superior margins in excess of 70% at the EBITDA level versus a Bharti Infratel which enjoys EBITDA margin of nearly 58%. Also, if you talk about the global peer set, they have tenancies in excess of 2 times versus Bharti Infratel which has a tenancy ratio of close to 1.8 times. So on the valuation front, most of them are not finding it comfortable to invest at the current levels. In fact, we had brokerages like Ambit wherein they are quite comfortable at entering into Bharti Infratel at 140 to 170 levels. So that is the broad range wherein most of the analysts are believing that Bharti Infratel shares could finally settle at. So let's see how the coming days pan out for Bharti Infratel. Possibly a mild correction from here on is also possible.
Yatin, very quickly, what about the other two, PC and CARE? What kind of gains can investors expect there?
Well, we had strong listing gains coming in for CARE Ratings as well as PC Jeweler, and analysts are believing that there could be further upside in both of these stocks going forward. Talking first about CARE, and the issue was attractively priced at 750 rupees per share, almost at a 25-30% discount to its listed peers. Now, analysts believe that the ability of CARE, to generate close to 100 crores of free cash flows every year would help them, building their balance sheet more stronger. Also, the management has indicated that they would look at diversifying into risk management and KPO related services. And also they have indicated that they would and they are looking at various acquisitions in the South American as well as in the African continent, which will help their revenue growth momentum sustainable going forward. Then coming to PC Jewelers, and again here the issue was attractively priced at almost 8.5 times FY14 earnings. Most of the analysts I spoke to believe that given the fact that their store addition plans are quite aggressive, they plan to add close to 20 new stores in the next 12 to 18 months versus the current store count, which is close to 30 stores in North India. That would help their revenue growth. Also, their sales mix is changing from gold jewelry. The company is shifting the focus to diamond jewelry sales, which will of course help their EBITDA margin grow in the very short to medium term. So on earnings growth front, possibly both of these stocks would do well in the next few quarters, and that is why there could be a 10 to 15% short term gain in both CARE Ratings and PC Jewelers.
Quickly get in Navneet to speak about the top mid cap movers this week. Navneet, what does your list have?
Well, that's right. There were a lot of mid-cap stocks which were in news during the week, and the first stock is Glenmark Pharma. The stock gained close to 10% during the week after the news came in that the company had entered into an agreement with Forest Laboratories where Forest would be making an upfront payment of about $6 million to Glenmark Pharma, and the remaining $3 billion will be paid in the next phase of work, on back of which the stock gained about 10%. On YTD basis, the returns of this counter is about 82%, and the counter trades above all its moving averages like 100, 200 and 20-day moving average. The other stock is Amtech Auto, which was the biggest mid-cap gainer during the week, up about 14%. Well, there was a lot of speculative buying seen in this counter because I checked the deliverable quantity data on NSE for the week, which was only between 20 to 25%. And remember, the stock has had touched 52-week low on 17th of December. From there on, it has only surged And if you look at the returns for the December month itself, it's up about 23%. There has not been any news development, but there was a buzz in the market that the company is looking to pick up stake in Autoline Industries, but the management has not confirmed that news as of now. And the last counter is Suzlon. The stock gained about 6 to 7% on back of the news that promoters had sold about 2% during the week, garnering 63 crore, which was a part of the corporate debt restructuring plan. And also the lenders met during the week in order to discuss the CDR package, on back of which the stock was up. And if you look at the 1 month return for Suzlon, that's up about 5%. And during the week, there were good volumes seen in this counter.
Oh yes, active movers from the broader markets. Navneet, thanks very much for that. CK, anything that you like out of this list? Glenmark, Amtech or Suzlon?
I think Glenmark has room on the upside, but I wouldn't rush in to buy it now because it's run up from 400 to 540. So, but it remains a buy on dips. Suzlon is a buy at the current level.
Okay. Sandeep, what about you? What is it that you would do with any of these stocks?
Well, the monthly pattern of Amtech is looking good, so I would pick it up for a target of 110, 112 at a current level of 87, 88, or maybe on down declines to 84, 85 with a stop loss of little below 80.
Okay, so that's the view on some of these key
Week ahead, a 1% gain coming in this week, and good action actually for the metals universe as well. One talks about the commodity space. What lies ahead? Let's bring in Manisha then to first get us some commodity views. Manisha.
Well, it's lower participation. Markets still awaiting for the US budget announcement to come, and that is really keeping the prices quite choppy. Starting with gold, and that has been the first weekly gain in last 1 month coming in for the commodity, but a 12th straight year of gains with more than 6 percentage points clocking on the higher side. For the coming week, you could be looking at a range between 1640 to 1680 as per many analysts. Crude prices then is something that has continued to be on the higher side. On an annual basis, though, the NYMEX crude is down 8.5%, but you have seen most of the energy products keeping the year on the higher side. It has to do with the geopolitical concerns coming in from Iran, UAE, keeping the prices high. Also, the US inventory is declining, and strong positive data coming in from China and US also weaving its way onto the prices. Watch out for a range between 88 on the lower side to 94 on the higher side in the coming 1 week. The base metal prices also have had quite a well run up in last 5 to 6 weeks then. We have seen copper and aluminum prices clock up nearly 5 to 6% of gains in 2012. The strong US data, the Chinese data, the home sales numbers, all of that has come in the positive before this year ends, and that really seems to be supporting the prices. In the coming year, or the coming week rather, markets are betting on nickel, lead and copper prices to run up more than the others.
Okay, Manisha, leave it at that. Thanks so much for joining in and giving us that perspective. For the base metal stocks, Dr. Narayan, it was an iffy week maybe for them, considering the kind of optics that they've enjoyed in the recent past. Would you initiate any kind of trades in, say, maybe a Hindalco or a Sesa or a Sterlite for that matter?
I think among the three, Hindalco, Sterlite are better positioned. Sesa follows in the wake of Sterlite. I do see some short covering happening across the metal space in the futures. So I do think maybe Hindalco is worth a punt, Sterlite too at the current levels, keeping a stop of about 1% or 2% from your entry price.
What about specific recommendations? Dr. Narayan, I'll start with you. What is it that you would recommend for somebody who's watching the show right now, trade come Monday morning?
Two long positions. First is in United Phosphorus. Currently trading at 129, 130, keeping a stop at about 22 to 25. Look for a target at 140. Stock has a nice build-up, nice pattern, upside breakout today, good volumes, good momentum, everything is positive, expectations are bullish. Second stock, Videocon Industries from the B group. Very decent pullback, right down, slamming it down into supports, and a nice upward tick today, indicating that buyers are back in the counter. 215 is where it is trading at. Stop at about 205, 207. Immediate target 225 to say about 230.
Sandeep, what about your trading calls for Monday?
Well, United Phosphorus has been a consensus buy, and I don't want to be left out. So I also have a buy in United Phosphorus. Stop loss of 126, target of 135. A buy in Reliance, stop loss of 828, target 865, and a buy in OFSS, stop loss 3222, target 3370.
Ryan and Sandeep Wagle, thanks so much for taking the time out and joining us and giving us your views on this leg of your trades. From Aish and myself and everybody who put the show together, thanks so much for watching. Have a good weekend.